GM everyone. Welcome to weekend workshop. Let's fucking go. Let's talk about momentum. So we have our momentum Pepe there. GM. Alright, so gather around, get in, let's go. Come on. Give it a couple of minutes, let a few more of you get in here, and then we'll get into it. Mastering momentum. As Bitcoin heads towards the 50 EMA on the 1 hour, like I mentioned, keep an eye on that. All right. So, let's do it. If you're new, welcome. If this is your first stream, GM, big GM, every weekend I do a special workshop, Saturday, no days off. Weekend workshop where I cover one specific topic. Today it's price action momentum. So momentum trading using price action, how to identify momentum shifts and continuation of momentum for you to then trade that using one of your systems. And as always, I've opened the live questions channel for you to ask me a question about this lesson and this lesson only. No general questions, no altcoin requests, just stuff about this weekend workshop. We're here to work, we're here to learn, and we're here to build some good systems. All right. So we'll get right into it. We'll do that, then we will get into the questions after. And so, get yourself into full screen. Remove any distractions. Get your notes ready, because weekend workshops are only available at the weekend. This will disappear on Monday. And let's go. GM. Let me mute this just in case some alert fires off. Okay, welcome. This is weekend workshop number 15, Mastering Momentum. So, we're first going to look at momentum through the lens of price action. So just the candlesticks on the chart with minimal other inputs. Many people will view momentum through indicators as well, things like RSI and MACD and several others. Volume. I touch on volume a little bit in this lesson, and I also touch on moving averages a little bit. But to keep it really simple, and to remember price first, right, because price is everything, it's important to understand what is momentum. How does it form? What does it mean? And why does it lead to breakaway moves? Or how does it reverse and go the opposite direction? The way you need to understand it is no move is guaranteed. So you can have a really bullish move and everything looks amazing and looks great. And then the next week, it goes the opposite way. And you can have the exact same bullish move and then it continues going up for several weeks. Obviously, this is very timely because of where we're at right now, as we are having massive momentum moves across the market this week. Weekly closes tomorrow night are going to be very important, very key. And as to whether we get this immediate momentum continuation or we see something, not necessarily reversal, but a slowing. So, first thing we want to talk about are momentum shifts. And before we learn about breakout momentum, which is what you're most familiar with, right? How do you catch a breakout that doesn't come back? That's the key. That's the goal. Every now and then you'll see breakouts that don't come back to their origin. But you first need to understand a lack of momentum before you can understand that. So, quickly before I go into this, everyone wants to be able to identify these candles, the ones that break out, right? And break out, no pullbacks, no pullbacks, no pullbacks. But of course, those are few and far between. First rule, higher time frame momentum signals are more powerful than low time frame. So higher time frame is more powerful. Higher time frame has more relevance. Higher time frame is more valid. Higher time frame provides a stronger signal. Very simple. Reason being is that it's harder to fake something on a weekly chart. And when I say fake, I don't necessarily mean like manipulation or whatever. I mean, quite simply, it's harder for momentum to be not real when it's on a daily or a weekly or even a monthly basis. If you go to like a 1 hour chart, right, you're going to see a bunch of different, you're going to see loads and loads and loads of momentum moves or breakouts, or candles that look really strong like this one and then it reverses, or candles that look really weak like this one but then it reverses, and so on and so on and so on. This massive bearish candle that then actually forms a bottom and chops around. Reason being is very simple. It only takes a fraction of the buying or selling pressure for price to move in a 1 hour chart as it would do on a 1 day chart. And that's why when you see strong momentum moves on a 1 day chart, they can be more reliable. And when you see them on a 1 week chart, they can be even more reliable yet again. And what does reliable mean? It really just means what are the odds of immediate continuation. Take this candle here, for example. You might look at this and say, well, this was near the top of the bull market, February 2021. But this momentum candle, which was a breakout above previous all-time high with a strong close, closing near the high with very little upper wick, that candle performed exactly as intended, exactly as expected, which means it led to immediate continuation. The next week was also a big green candle. Now, the following week reversed, and then the market went into a top, and then it ended up going lower. But that's not the fault of this candle, right? If you're looking at a specific candlestick, which we'll talk about, if you're looking at a phase of price action, if you're looking at momentum in a trend, whatever your trigger is, let's say it's a breakout, your breakout trigger would tell you that the market is more likely to go in the direction of the breakout before it goes the opposite way. That might be a breakout here that leads to a huge bull market from 20k all the way to 69. And that all started with this breakout above all-time high. And it followed up with another green, bit of consolidation, more green. Or it can be like this one where the big breakout candle above all-time high leads to another big candle the next week, and then the market starts to cool off. Because momentum is not guaranteed. It's not binary. You can't just say, oh, there's momentum now. I guess there's always going to be momentum. It doesn't work like that. So when looking at it that way, you need to understand that the momentum move is proportional generally. It will generally be proportional to the candles that preceded it or the move that preceded it. And you can, if you want to use the word guarantee, you can only guarantee it goes so far. Right? A bullish confirmation, if correct, will lead to continuation in the immediate term, but not necessarily anything beyond that. All right? So, with that said, let's get into this. So, first of all, this is breakout momentum. I don't want to look at that yet. I want to look at this. The best momentum shifts are obvious. So, let's start with this. You're going to see far more of this, regardless of what time frame you're trading on. You're going to see way more of this than you are of this, which is price comes up to a resistance or it goes down to a support and it tries to break out, and it does break out. And at this point, you're looking at it saying, is this a breakout? And your temptation, of course, is to get long, right? To buy it, to follow the trend or the perceived trend, entering where you think that the market, should be going. Because traders have a tendency to want price to go somewhere. So price goes up, you want it to keep going up. That's just a natural, normal bias that we all have. You have to fight that bias as a trader to try and remain objective in your thinking and your decision making. And if you look at resistance or support, you're always wanting the breakout to happen, because if you correctly identify a breakout, it's the absolute best place you could possibly get in. If you correctly identify this breakout as it's breaking out early, you can get in and you can have a very tight stop loss, because a proper breakout will not come back below. So you can get the best risk reward if you're right. But because the rewards are so great, the rewards for people who catch the correct part of a breakout are enormous. Very little drawdown and immediate profit. Because that is the reward and everyone's trying to chase it, you're going to have a lot more of this. This is literally why breakouts fail. Breakouts fail because when they succeed, they're so profitable. So people will say, bad traders will say, I don't care, I'm just going to buy every breakout because eventually the big breakout's going to come and I'm going to be in for it. That's what a bad trader will do. And they will take 10 attempts at a breakout and then catch it on the 10th time. And they'll probably make back some money, but it's clearly not an optimal way to trade. Much better is to try and identify momentum shifts, find the ones that are the most obvious, and trade in the direction of the obvious shift. So, looking at that, best momentum shifts are obvious. That means very simply, price has a resistance or a support. It moves towards it, so it consolidates below the resistance. And then from somewhere below resistance, right, not doing this generally, from somewhere below resistance, it will have a strong, undeniable breakout. It will be a candle that is so big that you can't miss it, that goes all the way through and closes well above. I'll define that later, what you can define, how you can define well above using a deviation with a fib tool. But the best momentum shifts are obvious. So instead of guessing or hoping or wishing, you should be sitting very patiently as a trader waiting for obvious momentum shifts and then trying to follow the signal that the market is giving you. If there is an obvious momentum shift, such as a lengthy consolidation followed by a major breakout, I know the temptation. It's easy to think, oh no, I've missed the move. But if it is a momentum shift, the move's just beginning. Because what's going to happen here is this market's going to keep going until it reaches a lack of momentum or resistance or the market starts to reverse. So, best momentum shifts are obvious. Remember that. Goes for all time frames, but of course, like I said, higher time frames more reliable in terms of duration because it requires more capital, more flows, more buying pressure or selling pressure if it's a bearish move. So keep that in mind as well as you go through. Now, before we look at breakout momentum and how to follow these moves, it's better to look first at what a lack of momentum looks like, a loss of momentum. Because you're going to see this more often. It's also a very valid trading style itself because you can trade reversals, right? You can go against the momentum shift as people are betting on the market to do something like this, where it's betting on it to keep going up because the market had been going up here, strong rally towards the highs. So there's momentum throughout the move, which you can determine by how long does price take to get from where it's been. So looking first of all at the downtrend from the top here to the bottom. From the top candle to the bottom candle, it took 21 bars, 21 candles, right? Then, from the bottom candle right back up until it meets resistance, it only takes between 8 and 10. So it takes less time for this move to retrace its decline. That is one way to indicate momentum. Another way to indicate it, you can see it over here, right from the top all the way to the bottom. It takes 10 bars, 10 candles. It then consolidates for a little bit. But on the way up, it really only takes 2. It clears out all of these 10 candles plus these other ones. So it really clears through. Price clears above 14 candles. So that's 14 days, weeks, hours, depends what time frame you're on. It clears above 14 days, weeks, hours worth of price action in just 2. That's one way of identifying momentum. Now, when you see that momentum, you have to see, is it going to continue? So like we show here, price declines, it retraces the decline very quickly, but then, so it has momentum here, but then on the breakout, there's a loss of momentum. How can we define this loss of momentum? Very simple. It fails to break and hold above 20% of the previous resistance. So what does that mean? You take a fib tool. If you've been in boot camp and you've watched the range trading lessons, you'll understand this. You take from the highest point to the lowest point of whatever swing we've just had. So the high to the low, right? See that? From the high to the low. And then as price tries to break out of that high again, you want to see, is it able to get above a 20% deviation? 1.2. You can play around with this and try different percentages yourself. The point is, a strong breakout will go well above 1.2. It will break above 1.3 and it will close there. It will hold. It will break above 1.4 and it will hold. A strong move will not just creep above the high and then stall. That makes it far more likely to be a false breakout. And that's where you say there's a loss of momentum. Now, you don't just automatically short this. You just say, is this a strong momentum move that can continue? It doesn't seem like it. It seems like there is a loss of momentum here. And then the exact same thing the second time. You take from this high to this low to see how the second breakout goes. Same exact thing. It wicks above, wicks above, wicks above. Can't close above 1.2. Another double confirmation. Right, the first failed breakout. It drops back inside. Failed to break and hold over 20% of the previous resistance. Loss of momentum. Tries it again. Double confirmation. Same thing. Loss of momentum. Down it goes. So at this point, you're saying this is not a trend. Okay, I should not be trying to be long chasing this bullish breakout. I don't have to be short, but you could build a system to trade the reversal. Because if there's a loss of momentum after a move up, it's going to reverse back to either where it came from, back to the lows, or even into a downtrend. So that's loss of momentum, lack of momentum, whatever you want to call it. And you can see this over and over and over and over again. It's all over the place. You can see it at bull market tops. Okay, so compare and contrast the bull market strong breakout with a bear market, or a failed breakout, I should say. At the very top of the last bull market, where did price go? It tried on a daily basis to break out from the 67k highs that were set in October. It failed to do so, came back inside after such a momentum move. I mean, you only need eyes in your head. You don't even need me to explain. Clearly, this is momentum, yes? Very strong move, very shallow pullbacks. Price just keeps going higher and higher and higher. So there was so much momentum from 40k to 67. Undeniable. So then, when you see the market try to go higher and it fails to do so, and we no longer have this really strong momentum, and price tries to go up and falls back inside, that tells you warning signs. Yeah, watch out. And so on and so on and so on. Massive momentum breakout here. This is when Tesla bought Bitcoin, and you can see very clearly, where does this candle close? This specific candle here. This closes about 40%. Right, it closes about 30%, 35% above the highs. Key thing, it closes above 20% of the previous range. It then has immediate continuation and continues on to the eventual top. Contrast that with the following breakouts here. This breakout was within 20%, so it was lack of momentum. This breakout, same exact thing. So I talk a lot about respect. Is price respecting market structure? Is price respecting the moving averages that it has been? The essence of trend trading or following trends is, what has price been doing, and is it still doing it? It's another way of talking about harmony, if you're talking about harmony and divergence. Harmony in this sense would be, price is respecting breakouts by closing above the highs, above 20% deviation. It then happens here and it doesn't do that. That's a deviation. Deviation from the expectation. The expectation is this breakout should close at 65. The expectation is that this breakout should close at 70 or somewhere around there, because then it's respecting what price been previously doing. Because it stops respecting it, that's your early warning sign. And then everything's obvious in hindsight. So in hindsight, it's really easy to look at this and say, oh, just look. You can literally see the momentum weakening. A visual way to represent momentum is, this is momentum, this is lack of momentum. In a very simple sense. That's why when markets move like this, when they move like that, with shallow pullbacks and impulsive moves, you see it going up and up and up, and the curve is going like that. And when you see the market going like this and barely getting above its highs and it's rounding out, they call it rounded top, they call it Wyckoff top, whatever you want to call it, it's a lack of momentum. Now, what have I just done? I did the loss of momentum, that's done. Okay, cool. Let's go in now and look at the one we all want to see. The momentum shift, breakout momentum. How do you know when a breakout's never going to pull back? First thing, you can never really know, for sure. But there are some key signs. Number one, resistance. Okay, so I've drawn the resistance as a zone here. And I will draw it, I will remove that for a second, and we'll look at this. Let's first look at the loss of momentum. This was a very nice bullish candle. This was a really strong bullish candle, but what did it do? It did not break